In the heartland of America, a young boy with an insatiable curiosity and an uncanny knack for numbers began a journey that would eventually make him one of the wealthiest and most respected individuals in the world. This is the story of Warren Buffett, the Oracle of Omaha, a man whose life's work has not only shaped the world of finance, but also redefined the very essence of success. Welcome to Tales of Titans, the place where business and history come to life. So, let's dive into the famous story of Warren Buffett. Warren Edward Buffett, born on August 30th, 1930 in Omaha, Nebraska, emerged as a legendary figure in the world of finance and investing. As the son of Congressman Howard Buffett and Leila Stahl, he displayed an early interest in entrepreneurship and business. Buffett's journey began with modest ventures, including selling chewing gum and Coca-Cola door-to-door and working in his grandfather's grocery store. He even operated a successful pinball machine business while still in high school, ultimately selling it for a profit. These early experiences fueled his passion for business and investments. Inspired by a book he discovered at the age of 7, 1,000 Ways to Make $1,000, Buffett's fascination with wealth building and investments grew. He delved into newspaper delivery, selling golf balls and stamps, and car detailing during his high school years. His entrepreneurial spirit was evident when, on his first income tax return in 1944, he claimed a $35 deduction for using his bicycle and watch for his paper route. Buffett's foray into investing began early, too. At just 11, he purchased shares of City Service Preferred, and by 15, he was earning over $175 per month delivering newspapers. During high school, he invested in a business owned by his father and acquired a 40-acre farm. In 1947, Buffett enrolled at the Wharton School of the University of Pennsylvania, although he would have preferred to focus on his business ventures. After 2 years, he transferred to the University of Nebraska, graduating with a Bachelor of Science in Business Administration at 19. His journey continued as he pursued a Master of Science in Economics at Columbia Business School, mentored by the renowned Benjamin Graham. These experiences laid the foundation for his iconic investment philosophy. Warren Buffett's journey through finance and investments is a compelling story of ambition and shrewd decision-making. In 1951, he started his career as an investment salesman at Buffett Falk & Company. Determined to learn from the best, he sought out Benjamin Graham, an investment guru and board member at Geico Insurance. Buffett's determination shone when he made an unannounced visit to Geico's headquarters, forming a lasting friendship with Lormier Davidson. Despite aspirations for Wall Street, both his father and Graham advised against it. Undeterred, he honed his public speaking skills through a Dale Carnegie course and taught an investment principles night class at the University of Nebraska, Omaha, even though he was younger than his students. During this time, he ventured into entrepreneurship, acquiring an unsuccessful Sinclair gas station. In 1952, Buffett married Susan Thompson, and their family grew with the arrival of Susan Alice in 1953 and Howard Graham in 1954. In 1954, he joined Benjamin Graham's partnership, earning $12,000 annually and learning the importance of a margin of safety in stock picking. In 1956, when Graham retired, Buffett's personal savings exceeded $174,000, leading to the founding of Buffett Partnership Limited. Operating multiple investment partnerships, he expanded his influence. By 1960, he managed 7 partnerships with the help of a doctor partner who brought in investments from fellow physicians. Buffett's venture into the Sanborn Map Company stands out, where activist tactics generated a 50% return in just 2 years by acquiring 23% of the company's shares and influencing a share repurchase. In the early 1960s, Buffett became a millionaire, with assets exceeding $7 million, over $1 million of which was his own. He astutely merged these partnerships into one, marking a significant milestone. His entry into the textile industry saw him acquire Berkshire Hathaway, a textile manufacturer, buying shares from its owner, Seabury Stanton. His initial purchases at $7.60 per share proved prescient as the company's working capital exceeded $19 per share by 1965. Buffett didn't stop at textiles. In 1966, he closed his investment partnership and turned to the insurance sector. This marked the beginning of his transformation of Berkshire Hathaway from textiles to the diversified conglomerate we know today. Buffett's annual letters to shareholders began in 1970, providing insights into his investment philosophy and company performance. Living modestly on a salary and investment income became his hallmark. During the 1970s, Berkshire acquired stock in the Washington Post Company, and Buffett's friendship with Katharine Graham deepened. In 1979, Berkshire made a significant investment in ABC, participating in its merger with Capital Cities, a pivotal move in creating a media giant. Buffett's role at Solomon Inc. in 1987 and his purchase of the Coca-Cola Company stock in 1988 marked key milestones in his journey. In the late 1990s, Warren Buffett made a significant move by acquiring General Ray, or Gen Ray, as a subsidiary, a decision that brought its fair share of challenges. The Rational Walk investment website later noted that Gen Ray faced issues with inadequate underwriting standards and a problematic derivatives book, leading to substantial losses that took years to resolve. Buffett's path crossed with Maurice R. Greenberg at AIG in 2002, where Gen Ray provided reinsurance services. However, during a 2005 investigation into an accounting fraud case involving AIG, Gen Ray executives became entangled in the controversy. Ultimately, Greenberg was forced to resign from his post as chairman and CEO of AIG, and the company agreed to pay a hefty fine in 2006. In 2010, the U.S. government reached a settlement with Gen Ray, allowing it to avoid prosecution in the AIG case. The settlement came with corporate governance concessions, including the requirement for Berkshire Hathaway's CFO to attend General Ray's audit committee meetings and the appointment of an independent director. Buffett's financial acumen was also evident in his forward contracts, where he entered into $11 billion worth of contracts to deliver U.S. dollars against other currencies. By April 2006, he had gained over $2 billion from these contracts. Moreover, in a philanthropic move that captured attention worldwide, Buffett announced in June 2006 his intention to gradually donate 85% of his Berkshire Hathaway holdings to 5 foundations, with the Bill and Melinda Gates Foundation receiving the largest contribution. Buffett's journey was not without its share of challenges, including criticisms during the 2007-2008 financial crisis. He faced scrutiny for potential capital misallocation and decisions that seemed suboptimal in hindsight. Yet, he remained steadfast, advocating for investment in American companies during tough economic times. Despite setbacks such as Berkshire Hathaway's 77% drop in earnings during Q3 2008 and mark-to-market losses on some investments, Buffett continued to make strategic moves. He became the largest shareholder in Goldman Sachs and assisted Dow Chemical with its takeover of Rohm and Haas. In 2008, for a brief period, Buffett claimed the title of the world's richest person, with Forbes estimating his net worth at $62 billion. However, the financial crisis took a toll on both Buffett and Bill Gates, with their fortunes declining. Buffett's portfolio diversified as he ventured into technology investments, surprising many who knew of his aversion to the sector. His acquisition of IBM shares signaled a change in strategy, driven by his admiration for the company's corporate approach. Warren Buffett's journey through the world of finance and philanthropy is nothing short of remarkable. In 2008, he held the prestigious title of the world's richest person with an estimated net worth of around $62 billion. However, he wasn't content to hoard his wealth. Buffett had a profound belief in giving back and setting an example for others. After generous donations to charity, particularly the Bill and Melinda Gates Foundation, Buffett ranked as the second richest person in the United States in 2009 with a net worth of $37 billion. His fortune continued to grow, reaching $58.5 billion by September 2013. Buffett's financial prowess was undeniable, earning him the title of top money manager of the 20th century in a survey by the Carson Group. He even surpassed legendary investors like Peter Lynch and John Templeton. Time magazine recognized his influence by including him in the list of the 100 most influential people in the world in 2007. Buffett's philanthropic spirit was celebrated when he was awarded the Presidential Medal of Freedom by President Barack Obama in 2011. Alongside his friend Bill Gates, he was named the most influential global thinker in Foreign Policy's 2010 report. In 2006, Buffett made an unprecedented move by pledging to donate 83% of his fortune to the Bill and Melinda Gates Foundation, representing the largest charitable donation in history. This generous gesture, however, came with specific conditions to ensure the foundation's continued charitable work. Buffett not only made financial contributions, but also actively participated in charity auctions. He auctioned his car, a luncheon with himself, and even shared investment insights to raise funds for various charitable organizations. His commitment to philanthropy extended beyond his immediate family, as he supported foundations run by his children and sister. Buffett's dedication to giving back remained a central theme throughout his life. In 2022, Buffett made another substantial donation of $750 million in Berkshire Hathaway shares to his children's charitable foundations, further solidifying his legacy as one of the world's most generous philanthropists. However, a 2023 report by ProPublica raised questions about his personal stock trading in companies that Berkshire Hathaway also dealt with, sparking concerns about potential conflicts of interest. Regardless, Warren Buffett's journey remains a testament to the transformative power of wealth when harnessed for the greater good. Throughout the years, Buffett's journey was marked by a series of investments, challenges, and transformative decisions. His philanthropic endeavors and candid assessments of the financial landscape endeared him to the public and solidified his legacy as one of the most influential investors in history. And that's all for today, folks. Let us know your thoughts in the comments below. Be sure to leave a like and subscribe for more amazing content, and as always, I'll see you in the next one. Peace.